Welcome to The Business of Family, the podcast where we explore the stories, challenges, and opportunities of family businesses. I'm your host, Tammy Buss, and I'm a family business survivor and also a family business advisor. In this show, we will be talking with family business leaders and experts to bring you insights and inspiration so you too can survive your family business journey. Whether you're a founder, a successor, a professional, or just curious about family businesses, this podcast is for you. Today, we're rewinding the tape and bringing you one of our most impactful conversations from the past. These are the episodes that started it all: foundational stories, powerful insights, and timeless lessons from families in business, experts in the field, and leaders who've shaped the way we think about legacy. Whether you're tuning in again or hearing it for the first time, there's always something to take away. So let's hit play on today's Legacy on Repeat. So welcome, Andrew. Thank you for joining us today.
Thanks very much for having me.
As an accountant, I'm sure you run into a lot of family-run businesses. There's a lot of stuff happening. And if someone was going to walk into your office today and they're a family-run business, what are the top 3 things you'd recommend that they get set up in the beginning, to save problems down the road?
The 5-year business plan, or having a robust plan, gets the individuals talking, gets objectives and goals of the individuals out there and openly discussed, and best aligns how perhaps they want to structure the business going forward, and it gives clarity for all the individuals as to where they want to take things. For example, if you've got a brother or sister who maybe have different ideas of where the business may go, maybe it's not one business, maybe it's 2 businesses. Or
right. Now, how many would have a 5-year business plan? When you're talking about first and second generation businesses, how many would have a 5-year plan already?
Yeah, that is to actually put that down onto paper. Perhaps not right from the very beginning. If individuals are coming together to form that family business, then at least having open discussions as to what those objectives are and what the goals are. So
number 1, to make sure you have a 5-year plan or a 5-year vision, if you're starting a family business or currently in a family business, maybe a new business. What's number 2?
The next aspect I would look at is what capital resources the individuals have and what the needs are going to be of the business going forward. So having a detailed cash flow, perhaps out 18 months, that really says these are the cash flow needs of the business, and what are the resources that individuals have? Where's that cash flow going to come from? Are they going to need to take on additional debt, or how ultimately the business is going to be financed?
So a 5-year business plan, a cash flow plan, and what's the third thing people should have before starting a family business?
I would suggest talking to a lawyer and getting a partnership agreement, and or if it's a corporation, getting a shareholder agreement.
So they bring up the fact of partnership agreements. I deal with a lot of family businesses. I've dealt with them for 30 plus years, and very few family members that I know of in my families that I deal with have partnership agreements between each other. As you get deeper into the generations, they tend to. But how many times do you see a first and second generation family have agreements between like a father, son, mother, daughter, whatever the structure is?
It's putting it out there as something I'd suggest they have. Whether they've actually got round to that yet is another thing. But it very much helps with what are the roles and responsibilities of individuals. If you get into a situation where you've got disputes, how are those going to get dealt with?
We never have disputes. So we all go into
family,
it's like
right?
when we get married, right? We all go in looking at all rose-colored glasses. So you want a 5-year business plan, you want a cash flow plan, and then you want to make sure there's an agreement in place. Now that's for a brand new business starting. So if you're in an established business or in a fairly new family business, does that change? Does that change your advice? Does it change if you're starting a business or you're already in one?
The circumstances of the business are going to vary, and each family business is going to be in a different spot. If you're looking to transition and there's nobody in the next generation looking to take on, then that's you're looking at a different exit plan to if you were looking to manage that succession through the next generation. Being aware of the circumstances and planning ahead. Those 3 things of a 5-year business plan, a cash flow, and a shareholder agreement, that's very good planning ahead, and you're taking advice from the right individuals to build those plans and those agreements. Whether they're all in place from day one is very unlikely. If you're into a situation where you've 2 or 3 generations in, I would certainly expect those things to be to be
Well, I mean, the
bedded
deeper
in.
you get, the more structure you have in place, right? So if again, for first generation family businesses, we tend to be smaller, right? Now, not all, but the bulk of family businesses are under 100 employees, and there's a lot. When you first start out, or you might only have 20 or 30 employees. Do you recommend, or do you talk to them about outsourcing things like maybe payroll or HR? Because again, when we're smaller, we don't think about that. We tend to be focusing on growing the business and not really focusing on a lot of the internal HR issues or accounting issues. And I know as an accountant, you're one of the trusted advisors they come to for advice. And do you talk about that at all for trying to keep a business running smoothly?
Yeah, absolutely. The timing of bringing in external advisors, outsourcing to certain functions of the business, it will be dependent on the stage of the organization as to when it's right to bring in those external advisors. Or so let's take the example of a growing business. They need to take on staff. Maybe that's the right time to outsource the HR function and seek external advisors on talent engagement, talent management, building out HR policies, make sure those policies and procedures are in place.
We don't even care about that stuff when we're starting out.
Yeah, absolutely. And I mean, one of the benefits of outsourcing is that ability to bring on the expertise without having to then bring on an overhead as well. So you can bring in that expertise when the timing is right. And I've seen it work very well for a finance function. Maybe at the beginning you're somewhat shoestrapped but you want to take on that financial reporting and strategic advice, and you can reach out, get a part-time CFO, fractional controller, or one of those roles. One of the other things to think about when you're actually going through a generational transition or some kind of exit from the business, that can be a huge distraction to the business. And not that you like the idea of taking the eye off the operations, but it can be a distraction to that. Now, if you've got external advisors, maybe fractional CFO, who's got a kind of an eye on the business and is not as distracted by generational or some kind of exit succession, that can be quite valuable to make sure the actual operations are staying on track.
Now, a fractional CFO, of course, it sounds like a really big role. It sounds very expensive as a small business owner. But what about things like sending out payroll? Like, do you recommend that payroll is done by somebody other than, if you're a small company and you can't hire somebody full time in HR or payroll? Is that something that you recommend to clients to say, look, we've got to deal with CRA here. We have to, when someone's hired, there's forms. When people leave, there's forms. There's, installments that have to go in. Like, you just want to get behind in this stuff and understand there's a lot of changes legislative wise on a regular basis that if that's not your full-time job or you only have 20 employees, I mean, you can't have a full-time payroll person. Do you recommend people do that right from the get-go to make it simple, or?
I think specifically on the point of payroll, there are different ways of managing that. There's really good software out there, fairly hands off. You set it up, and you've got salaried individuals. It'll roll your payroll each month. And in terms of staying on side, in terms of compliance, it doesn't really matter what stage of the business you're at. You want to make sure you're on side with the taxman, so you don't get into sticky water with the CRA. Looking for external support whilst you're trying to grow the business, and focus on the things that you want to focus on, rather than having to deal with CRA matters or payroll matters. You can definitely lean on an external advisor to help you with those.
Now, speaking of CRA, when you see these small businesses, again, we don't have full departments dealing with all of these issues. What is the most common issue that you find that, a reassessment or a notice back or missing information from CRA? Like, what is it? What is the most common as a small business that you see in your practice?
There's a couple of different areas when you've got expenses that go from one year to the next with big variances, that's going to be a bit of a trigger to the CRA to perhaps look into the nature of those expenses. You always want to make sure right from the beginning you've got supporting documentation that's going to, if the CRA does need to see receipts documentation, that you've got those on file. Anything you put in that tax return that is some kind of is supported with invoices or receipts. Other areas that the CRA is going to be interested in would be shareholder draws or a shareholder loan balance. If you've taken money out of the company in excess of dividends or salary, what was due to you, then if you're in that shareholder loan situation and that's not repaid, if you've got a shareholder loan 2 years in a row, then that's going to be a flag, and you potentially might get income inclusion on that. Other areas. We're seeing a lot where the CRA gives its focus can change over time, for sure. Vehicle expenditures, how those are taxed within the company, if it's a company vehicle or if it's a personal vehicle, just making sure that that's being treated in the right way from a tax perspective, because the CRA does look at that from a mileage perspective, always making sure you've got a logbook to support any mileage claims and that kind of thing.
The logbook, the dreaded logbook. I had that years and years ago. Man, that was a big pain.
Yeah, again, there's software out there.
Oh, is there? Well, you can tell I'm old.
Yeah. I mean, just a more recent one. I'm going to talk about the CRA looking at different things. More recently, the CRA is wanting to see foreign tax credits. If you're claiming a foreign tax credit for anything, they want to see the support for that.
Right. Now, speaking of dividends and salaries, as a small business owner, we like to kind of share our salary around. If the business is actually making money, we might have a spouse who we, want to pay them something. Maybe they're doing a little bit of work and we want to do income splitting. I know there's been a lot of issues around income splitting and, making sure that the person is actually doing the work to provide that. And then, of course, there's TOSI that came in. That's a big issue. And dividends versus salary and all that kind of stuff. So what kind of advice would you give a small business owner about trying to share the wealth amongst the family members now with all the changes that have come in since 2016, 2017?
Yeah, when those TOSI rules came in, that was a hard hit to income splitting. It's still possible in certain circumstances, as you rightly say, if the individual is active in the business, then paying them a reasonable salary, and that can be the case with a wife or husband, spouse or child, as long as they're actively involved and they're getting paid something reasonable, right? So if they're paying, if you're paying somebody else to do the same role, what would you pay that arm's length individual to do?
Oh, I shouldn't tell my kids that, because they used to come in and clean the office, and they didn't get paid very much. They got fired a few times. So ongoing communication as to what that reasonable pocket money is, for sure. Yeah. So what is the biggest changes that you've seen over the last few years with family businesses, particularly with COVID, the way it's been? Like, what is the biggest advice you're giving to small family businesses now in any sort of form?
In terms of the how individuals can get money out of the corporation, and it's a constant discussion, and people's circumstances are very different. People might have a need from a lifestyle perspective to take out a certain amount of money. Whether they take dividends or salaries can depend on whether their RSP situation,
right.
Or
deciding when you're dealing with your clients to decide to take a dividends versus a salary, because of course it's going to impact your CPP contributions, going to impact your RSP contributions. Is there a certain threshold or a certain age that you sort of say to clients, well, you know what, this is not a bad time to switch to dividends? Because I know dividends always sound so great because they're taxed at a lower, potentially lower rate. However, you give up a lot of other benefits by pulling dividends only, correct?
Yeah, absolutely. It very circumstances dependent. If you've got if the individual is a slightly older individual, you don't want to impact on their old age security, and there's potential clawback if you if the other income's too high there. So very very much circumstances dependent, and I'd suggest talking to a CPA, talking to an advisor as to what the right levels are. Ultimately, you want to make best use of those marginal tax rates, be it dividend or salary, that will be very individual dependent.
Yeah, I know it's, some days you just want to pull out all dividends, but, again, regardless if it's dividends or salary, you still have to have the income to pull it out, right?
Yeah.
So, what is the biggest, or what is the one, big takeaway that you would say or give to a family business that is, in the process of thinking about succession planning, talking about it, or, the runway's getting shorter? Because, the one thing is we first generations really, don't like to give up a lot of control. But what's the one advice that you would give a family business today if they said, oh, I'm getting tired of this. I need out.
So I would absolutely suggest they plan ahead. And the uncertainties that are in the marketplace right now, be it cost of living, be it interest rates, be it supply chain concerns, whatever it happens to be impacting your business, those uncertainties are going to they're going to be there. But if you've got a plan to meet those challenges head on, to coach, well, first of all, to select an individual who you're expecting to be the next generation of the business. Talk to that individual, communicate what your expectations are, what their expectations are. Make sure everybody's bought into the idea of going ahead with that succession plan, and really coach that individual through to take to take that principal role.
Mm. You know what? You're going right into my book, because my book, Passing Down Your Success: Help Your Family Business Prepare for the First Transition. One of the first things we talk about is vision. You have to really have a vision to where you're trying to go in order to get anywhere. It's like a roadmap, right? If you're in London and you're trying to get to Windsor, you don't want to head towards Toronto. So it's really good to have a vision. And the second thing we talk a lot about is communication. That seems to be a consistent theme through all of our discussions, is have a vision, communicate, and get the right advice from advisors and your trusted team. So, Andrew, we talked a lot about outsourcing and the value, and there's programs to make it simpler for people. But would you consider it, in your capacity as a CPA, that it's less expensive and less time consuming for your clients to actually outsource or get some programs in place? It's cheaper than having you come in and try to fix it or deal with CRA. Like, do you see that a lot, where it's a high cost to kind of fix a problem that you thought you could do because your daughter was working in or your son was working in accounting in the office and made some mistakes?
Yeah, absolutely. We get lots of different family members playing lots of different roles in the company. So one of those being bookkeeping potentially, and having that financial integrity of numbers is really important when you're trying to run the business. You want to be able to generate an income statement and know where you are and make decisions off good financial information, and so having that bookkeeping in place is great. BDO offer an outsourcing service, but equally individuals we see are using software like QuickBooks Online, for example, which is fairly easily accessible. I'd urge businesses to be able to have good regular updates to their financials. Make sure you're doing a monthly bank reconciliation, making sure you're doing that monthly bookkeeping to make sure that your numbers are good. Also from a CRA perspective, if you're running a payroll, making sure your remittances are timely and you're not getting behind on payroll remittances. Also HS.
Yeah, that's a big no-no.
Absolutely. And also HST filing. And making sure you're timely with HST filings and payments. That's key from staying on side for a CRA perspective. Good.
Well, thank you, Andrew. Listen, if anybody wanted to reach out to you, how can they find you?
Absolutely. So as you said at the very top, I'm with BDO. Our website's www.bdo.ca. And if you wanted to reach out to me individually, I'm Andrew Moss, and my email address is amoss@bdo.ca.
Thank you very much for coming in today and talking to us. Again, this is Andrew Moss. He's a partner at BDO London. And thank you very much, Andrew.
Tammy, thank you very much for the opportunity.
If you like this episode, subscribe to the Business of Family podcast on your favorite listening platform. You can also find Blue Roots on Facebook, Instagram, and LinkedIn. On the next show, I'll be back with another amazing guest who will inspire you with their family business insights. Until then, take care and keep it in the family. This podcast is for informational purposes only and should not be considered legal, tax, investment, or insurance advice. Before acting on any advice, please contact your personal or company advisors.